Hello, it's me, your radio pal, Ellis Martin, and this is Money Talk Radio, South Florida. Hi to our friends here on the home turf in Boca Raton and West Palm Beach. To all of you Canadians hanging out at Delray Beach, I see you. Key West, put some clothes on. Okay, don't. That's fine. Port St. Lucie, Fort Pierce, Fort Lauderdale, Miami. Are you up? Hollywood, Florida, and Vero Beach. Now pipe down. You'll get your turn. Listen up. Companies and or individuals that are on this program have most likely paid yours truly for the privilege to do so, to get hold of your ears and eyes for potential investment. That means everyone here is biased. Invest at your own risk. There is opportunity on these airways, but you'll have to do your own due diligence. Understood? Good. Subscribe to my digital audio interviews. Hear them before anyone else does. It's free. Go to ellismartin.com. That's ellismartin.com. Now, here's more of me with other people. Join me right here, right now, on Money Talk Radio for a chat with Daniel Major, the CEO of Goviex Uranium. Goviex trades on the TSX Venture Exchange as GXU, and in the U.S. on the OTC as GVXXF. Goviex is a mineral resource company focused on the exploration and development of uranium properties in Africa. With a substantial resource inventory, Goviex's main objective is to become a major uranium supplier by exploring and developing its key projects, the Matuela project in Nigeria and the Muntanga project in Zambia, both of which are forecast to be in production in this uranium cycle. Daniel, welcome to Mines and Money Miami. It's great to see you here, old friend.
My first time to this conference, and actually it's been pretty good, and it does help with uranium at $100 a pound.
And I'd like to see the equities catch up with that, and I believe that they eventually will, won't they?
Well, absolutely, and I think that's one of the key talking points presenting the companies in general, is that while uranium companies have done well, they haven't really caught up with the big surge in uranium price that happened in the second part of last year. And even now, they're treading water and really not following it through.
Well, I think as long as we keep spreading the word and talking about it, and I was just on a critical minerals panel about 15 minutes ago, and we were talking about lithium, we were talking about nickel, we were talking about copper, and somebody on the panel, Eddie Sugar, magically brought up, as he should have, uranium. Why is that not on the critical mineral list? And it seems to me that's the answer for everything, especially with clean energy and ESG requirements and what have you.
But it is. It's actually on Canada's critical mineral list. It's on the US's critical mineral list. The UK, there's a number of jurisdictions that now have uranium on their critical minerals list. The one thing that I've also seen, we're talking back to the valuation side of it, is the number of analysts now upping their long-term prices. I've had 3 come across my desk in the last week who've all moved their long-term price up to $80 to $85, and their valuations have just jumped accordingly. So I think we're starting to see that beginning of, certainly from an analyst perspective, applying in the new prices going forward. I don't think we've seen the end of this uranium bull cycle. You've seen some consolidation, but we're consolidating at $100 a pound. We've seen uranium go from mid-50s in the summer of last year to over $100 by the early in this year. Of course it has to consolidate at some point. It can't just keep going up on a rocket trajectory. The utilities have got to sit down and figure out what their buying strategy is going to be, because they will have had a buying strategy at a lot lower level, and they've now got to change all of that and figure out how that works through both their budgeting but also how that plays through into their power price.
Now, you mentioned consolidation, and really the equities have just not caught up with the price as it is at $110 or $120. I haven't looked today, so I don't know the exact figure. But if there's a contraction or a consolidation, as you put it, to $80, which is darn good and extremely legitimate, especially compared to just a year ago, less than that, is the market going to view that negatively?
The consolidation's around 100. What I'm saying is the analysts are moving their forecasts up. So most of the analysts were using $65 as their long-term forecast for their valuations, now all moving them up. So we've got analysts moving their net present values and share price valuations up almost double from where we are now on a lot of stocks. In Goviex's case, it's like 4 times up from where we are now. So a massive uplift is coming through. And I think that issue hasn't been priced into the stocks. We were starting to price in $65. We're definitely not pricing in $100.
We see a lot of junior activity in the Athabasca space. Many companies, or shall I say, more companies than before, and we'll see continued growth in that area with exploration and development. Exploration and development, I'm not claiming production, and this is where perhaps the big difference is between a company like yours operating in Africa as opposed to exploration and development companies that are operating in Canada at the moment. Let's explain the difference and why, if you're looking at jumping into the uranium sector, and now I'm talking to those that are not in uranium right now that are in our audience, and why they should consider it and a company like Goviex.
Oh, absolutely. I mean, I think a couple of things. One of the things that's come to me for a lot of the analysts coming back and feeding back and fund managers has been a strong run that you've seen in the big players, your Camecos of this world. But the developers, like our own, have not really run at all. And there's a lot of catching up to get through from that point of view. But yeah, I mean, that's always the second round. The companies that are going to be building stuff, the companies that are going to add production to the pipeline are the ones you want to be investing now. Because those are the ones that are effectively leveraged to the uranium price itself. That's what changes their cash flow. That's what changes their economics of their project, makes them more doable and more economic to build. Uranium price makes no difference to an exploration company. They can carry on exploring, but at the end of the day, now it's the time for the developers. You may look at the explorers later in the process.
What is the plan when you go into production? Are you going to remain the producer, or are you looking to partner with one of the majors, maybe Orano, maybe Denison, maybe Caneco, and a bunch of maybes right here?
At the end of the day, we're working the African scenario, and none of those three are particularly working in the African position. So there are alternative partners out there. I mean, there's the Chinese, for example, who are desperate to find uranium out of Africa because they rely heavily on Kazakh material. And if you look at Kazakhstan's forward production curve off their IPO document, they're pretty well peaking out already and are going to need a lot more uranium to drive their demand, which is quadrupling over the next 20 years. So Africa's a place that the Chinese companies are going to be looking. With something like Matanga, we can do it ourselves. It's a really low capex project and a high returning project. That one we can move forward straightforward. We've got our Nigerian project as well sitting out there. That one's obviously paused from a point of view while we waited to see where the politics were going to end up. I mean, it was very restrictive with the sanctions on us. Our understanding is that those sanctions will be lifted very soon, in which case we can start on that forward trajectory on Niger as well. And the point I'm making from a value point of view here is that if you look at our two projects at $75, they're each worth about $350 million each to $400 million. Well, we're trading at $120 million. So you're getting Matanga at a deep discount. You get Niger for free when you buy Goviex's shares at the current price.
I guess in the scheme of things, that's really all that matters, especially to a generalist.
Oh, absolutely. Absolutely. And the underpin, which is that price. And another anecdote I'll give you, I was at Indaba recently, talking to the debt side for Zambia, already starting to prep ourselves. But we're starting as well to see an increasing number of people come back and relook at Niger as well, because it's a very different place to be looking at Niger at $100 uranium than it was when we went out on the debt market previously at $55 uranium. With regarding Matanga, that's a very easy pitch, and we had a lot of people very interested saying, right, when you've got the FS out in the summer, come and talk to us. We want to have a look at it.
When do you expect to be in construction?
In the case of Zambia, finish the feasibility study this year. We'll be out looking for the debt for that project. So we'd start construction next year with first production coming out early 2027. In the case of Niger, then obviously following a similar pipeline, but we'll probably start doing some low-level construction now to keep in line with what the government's looking for, while we are going to be looking at that financing already. So we've already been engaged with the lenders, and they're telling us to start getting on with the due diligence process that's going to be required for this. So that's a major step forward, and we'll start to accelerate that. The nice thing for us as well is that Global Atomic has got very similar lenders to us. So a lot of the things that they are going through to pull their package together, we can basically repeat straight off when we go in with our own.
Well, I would say, and we're not making any recommendations because I'm not allowed to do that. I'm biased and neither can you, but I would say that potentially your company at 15 cents US might be worth taking a look at.
Absolutely, it's definitely worth having a look at. You know, and from a risk perspective now, that is such a low risk investment. I looked at one of the analysts came out, I won't say who it is, but they put a valuation out for us target at 70 cents. So, you know, if you only get half of that value, that's a double. You know?
Well, Daniel Major, it's always good to see you and chat with you. Thank you so much for joining us today here at Mines and Money Miami.
It's been a pleasure, and it's been great fun. It's been a great conference. Thank you.
I've been speaking with Daniel Major, CEO of Goviex Uranium. Goviex trades on the TSX Venture Exchange as GXU and the U.S. on the OTC as GVXXF. The company's website is goviex.com, Goviex.com. I'm Ellis Martin, and this is Money Talk Radio.
Subscribe to Money Talk Radio. Go right now to ellismartin.com.
Join me for a conversation with Craig Shesky, the CFO of the Metals Company, trading on the NASDAQ as TMC. The Metals Company is an explorer of lower-impact battery metals from seafloor polymetallic nodules on a dual mission. One, to supply metals for the clean energy transition with the least possible negative environmental and social impact. And two, to accelerate the transition to a circular metal economy. The Metals Company, through its subsidiaries, holds exploration and commercial rights to 3 polymetallic nodule contract areas in the Clarion-Clipperton zone of the Pacific Ocean, regulated by the International Seabed Authority, sponsored by the governments of Nauru, Kiribati, and the Kingdom of Tonga. Go to the company's website, metals.co. Once again, it's me, Ellis Martin, Money Talk Radio in Miami, Florida. We are here for Mines and Money Miami, and I'm sitting with my friend and sponsor of the program, Craig Shesky, with the Metals Company. Craig, nice to see you again. How are you?
Doing very well, Ellis. Thanks again for having me on. It's a pleasure to be with you.
What's happening in the world of deep sea mining for nickel nodules?
It's been a very busy last 6 months, and really a lot of the geopolitical environment has been changing over the last 6 months, and really we think moving in favor of the commercialization of this resource. In fact, you may have seen earlier in January, Norway opened up their territorial waters for deep sea exploration and pending environmental work exploitation. So there are credible industrial countries that are now throwing their weight behind deep sea resources. Late last year, China had made announcements that they are looking to move quickly ahead in deep sea resource extraction. In fact, the Washington Post came out with a deep dive article on what Chinese plans are in this industry. And that's actually been very important on the geopolitical front because it's drawn out a response from the United States. In fact, you had 31 congresspeople late last year write to the Pentagon demanding a plan on how the U.S. can process and refine polymetallic nodules. And that actually culminated in the National Defense Authorization Act in late 2023, which basically lays out a map for how the Pentagon plans to catch up in this race of processing and refining of nodules. That report from the Pentagon is due to the U.S. House Armed Services Committee in March of 2024. So right around the corner, we expect more good news on the political front. And don't forget that we're also applicants for the Department of Defense DPA Title III grant program. So the political winds are blowing in favor of the extraction of this resource. And it's a really great time to be bringing online what mining.com ranks as the #1 and #2 largest nickel project on the planet.
From what I understand, compared to other forms of extraction, which really means out of the ground, deep sea nodule mining for nickel is the cleanest form, the most responsible form of collection of nickel than anything else. In fact, Indonesia, Russia, China is considered dirty nickel, and we can have that in the U.S. if everything's permitted for it, and it's not being permitted right now.
You're absolutely right, and what's very interesting about nickel supply, it's increasingly coming from a few names. As you mentioned, Indonesia, Russia, and really the Indonesian supply is funded by China. So very soon you're going to have 2/3 of the nickel market coming from Indonesian supply, and Russia controls about 20% of the Class 1 nickel market. So really you're going to have over 3/4 of global nickel supply coming from what could be perceived as adversaries to certain Western countries. So what we would produce in terms of the metal from these polymetallic nodules would have a lower CO2 footprint than traditional land-based sources. There's no deforestation. There's hardly any solid waste. There's no tailings. There aren't any local communities to move. Importantly, there are land-based nickel projects that are responsible and that can be done right, but a lot of it is supply in Canada or Australia that frankly is now struggling. So given Indonesia has been flooding the market with relatively low cost and high environmental impact nickel, it's creating an opportunity for a new source of supply like the nodules coming from TMC. We can compete at the current nickel prices. We can compete at nickel prices far lower. So this is a large potential source of supply that isn't already controlled by China or Russian-funded sources.
So let me understand this. You can compete economically with Russia, China, and Indonesia.
Yes, we can.
Lay that out a little bit if you wouldn't mind.
Well, really, it all comes down to the unique attributes of this resource. These nodules have high grades of nickel, copper, cobalt, and manganese. And if you actually roll those metals into a nickel equivalent, you're talking about over 3% nickel resource. That compares to many other undeveloped nickel projects in Canada or Australia that might be 0.2% or 0.3%. So it's just a naturally higher grade of this material. Said another way, you're moving less material to get the same amount of metal. Importantly, too, these nodules are not buried. They're sitting on top of the seafloor in the Clarion-Clipperton zone of the Pacific Ocean. So really, it's more about collecting these nodules than mining. There isn't any digging or blasting or drilling. So the process to collect them, along with the fact that the grade of the material is naturally high, leads us to a position where we can be economic really in almost any price environment that we can envision.
So not only are you providing a clean source of energy for the EV sector, for the battery metal sector, you are doing it in a environmentally responsible way. Now, having said that, there might be some that don't quite understand mining like we do that would say, well, what are you disturbing under the sea?
Yeah, that's a very good point, and a lot of people have that question, and I understand a lot of people hear deep sea mining and they have a certain knee-jerk reaction. That's why it's important to actually look at science-based evidence, and that's what the regulator, the International Seabed Authority, is going to be basing their decision on, and we think allowing us to move forward to begin commercial production around the end of 2025. So that science-based evidence is starting to come out, and the potential impacts of collecting these nodules are frankly quite a bit lower than what some of the speculation has been to date. Not all science is created equal, and when it comes to speculation about what these impacts could be, that speculation has to give way to actual in-field observed data. And now that we've done our collection test, now that the Belgians did theirs, the Germans as well, a lot of this data is starting to come out showing that the potential impacts, including the seafloor plume, are far smaller than initially speculated. So while that's taken its time to trickle its way through the media, the International Seabed Authority, and importantly their Legal and Technical Commission, who will be reviewing our application, they are well aware of this new data that's coming out. We present it to them regularly during their ISA meetings. There's another one coming up this March in Jamaica, and all of this information to us is pointing in the right direction, showing that these nodules can be collected at the lowest possible planetary impact.
How far away are you from offering nickel to the supply chain?
We would expect to be in production around the end of 2025. So post-processing, and keep in mind we have a binding agreement with a facility in Japan through Pacific Metals to process these nodules in terms of onshore capex at no cost to TMC. It would just be a tolling fee. So really processing the nodules at existing facilities. So that material would be available on the supply chains in 2026.
Let's spell out the potential investment opportunity. Underline the word potential investment opportunity for those here in Florida listening to the show on the radio here and our audience around the country and around the world.
Certainly. Well, what we are developing is a very high grade, very economic, very large resource. In fact, again, what mining.com has ranked as the number 1 and number 2 largest undeveloped nickel project in the world. And yet, our market cap right now is still under $400 million. And the net present value of the underlying asset, our first block alone, Nori Area D, has a net present value, as calculated by AMC Consultants, of $7 billion. And that was done in 2021. But this is a resource that, talk about the whole resource, not just our first project, which is less than a quarter of our total resource. The NPV is measured in the tens of billions. But just on that first block alone, we're trading around 5% of the underlying net present value of that asset. Typically, a nickel or copper developer at this stage of pre-production might trade between 30 and 40% of NPV. So really, there is a major valuation disconnect between the quality and size of this resource versus our market cap, which we don't think is effectively discounting all of the good news that has occurred over the last few years and all of the de-risking that has occurred to prove the collection technology. So importantly, a lot of people focus on the regulator, the International Seabed Authority, and we think they're making great progress on finalizing the rules that allow this industry to go forward. In fact, the Secretary General of the ISA, Michael Lodge, was on CNBC earlier this week, and he was asked, is this industry going to happen? And his response was that it seems to be inevitable. And we would agree with that. And it's really based on confidence that we're seeing on the environmental side to show that the impacts here can be managed and mitigated and kept under control.
I imagine you've had some positive response from some of the family offices that have visited you here at this conference, correct?
Yes, absolutely. We've had a packed schedule of meetings at this conference. We've had a few other side events presenting to really several dozen high net worth individuals and family offices. Of course, we have new initiations of coverage, including Cantor Fitzgerald, who initiated on us in late 2023. And that's helpful for a lot of our institutional fund potential investors. But we want to make sure that this story can be well told to retail, high net worths, family offices, and institutions. So So that's why we are going to leave no stone unturned and continue spreading the word about this very special resource.
Well, you've done that very proficiently, very nicely on this program, Craig. Thank you so much for joining me at Minds and Money, Money Talk Radio here in Miami.
It's a pleasure, Ellis, anytime.
I've been speaking with Craig Shesky, the CFO of the Metals Company, trading on the NASDAQ as TMC. Go to the company's website, metals.co. You're listening to Money Talk Radio South Florida, and I'm still Ellis Martin. Join me now as we continue at the Minds and Money Miami conference with my friend Victor Cantori. Victor is the CEO and president of Amex Exploration, a great high-grade gold play in Quebec, Canada. Amex trades on the TSX Venture Exchange as AMX, and here in the U.S. on the OTC as AMXEF. Amex is trading today at approximately $1.11 a share. Amex Exploration is a junior gold mining exploration company, the primary objective of which is to acquire, explore, and develop viable gold projects in the mining-friendly jurisdiction of Quebec. That's in Canada. Amex has made significant gold discoveries on its 100% owned high-grade Perron Gold Project located again in Quebec, Canada. The project is well serviced by existing infrastructure on a year-round road 10 minutes from an airport. Furthermore, the project is in close proximity to a number of major gold producers' milling operations. It hosts both bulk tonnage and a high-grade gold-style mineralization. Since January 2019, Amex has intersected significant gold mineralization in multiple gold zones and discovered copper-rich VMS zones. Victor Cantori here at Minds and Money Miami. Thank you so much for joining me today on the program. It's always great to see you wherever I'm at in the world and you're there.
It's great to see you here. I always love coming to your program.
I'm potentially looking at the best company in the gold sector right now. You have recent drilling intercepts of 102.07 grams per ton of gold over 6.10 meters. And that's not all. Tell us all about the Perron project.
Absolutely. So if we talk about jurisdiction, we're in the province of Quebec. We're in Canada, one of the best jurisdictions around. Then if I look at the location, which is very important, it's about 7.5 hour drive from either Montreal or Toronto. You have water, you have electricity, you have the population that you need. That means the labor force that you need. Great community. It's actually a former mining town that's looking for a mine now. So we're there and we're ready to supply it all.
And you've drilled already over 400,000 meters, haven't you?
Over 400,000 meters, and we've barely scratched the surface.
You've got a very large exploration program anyway. It's one of Canada's largest. Tell us about that.
Yes, at the project, you're looking around 4 kilometers of over 20 kilometers of prolific faults. The resource that's going to be coming out shortly, sometime in the end of the first quarter, is where we're going to be reporting our initial resource. And after that, we're doing an extensive drill program to cover the rest of the faults. So we're actually going to be going in 2 prongs right now. We're talking about going on development. What it means for us for development is putting out the economic study, the resource first, and definitely on the environmental side. But at the same time, we're going to be pursuing an aggressive exploration program.
I understand that Eldorado Gold is a strategic shareholder of Amex. What brought them in?
They had access to the data room like all the other mid-tiers and the other companies. I guess for us, it was credibility on the work that we've done. They've really liked the project. We've met them last year and they did intensive work.
So actually, there's potentially, and these are my words, they're not anyone else's words, some great upside when you're trading at about $1.10 US. With this kind of grade and this kind of support that you have and all the work that you've done, even in a market that's challenged like we all know that we're in right now, if you're looking for a company that is involved in gold and you've got some copper resource, but primarily gold, and you're passionate about the metal, Amex looks like a good potential investment like it did a couple of years ago when we covered your company.
Absolutely. So we have 114 million shares out right now. We just did that financing with Eldorado. So they put in $15 million. For us on the front end, it's ended up being $26.65 million at $2.35. That's going to be going mostly into exploration.
And what does the exploration program look like for the next 12 months?
We're fully funded for a full exploration program for the next 2 years. We're going to probably be doing around 50 to 60,000 meters this year and 50 to 60,000 meters in 2025.
Now, you've been at this conference. What is the sentiment like with the investors that you've met with?
The sentiment for us has been very good. There's a lot of investors that are looking forward to more results coming out. Like just recently, too, we had in the Gratien zone, these results are not going to be included in the resource calculation that's going to be coming out. We had some recent results of 29 grams per ton over 3.5 meters. There was another one just below that one that was about a half an ounce, 18 grams per ton, also a little over 3 meters. So it's exciting because we're going to come out with a resource but there's still a lot of blue sky. So the resource is just going to continue growing.
I was looking over your deck here, and I see some very interesting information about the QF-VMS copper discovery in that zone. Tell us about it, Victor.
This is a copper-rich VMS mine that's about 4 kilometers from us. And where you're going to find one VMS deposit, there's usually not one. There's going to be many of them. We haven't been really exploring for it. We didn't want to confuse the story. We really kept it, we're a gold story. But we did drill a few holes in there, and there's a lot of similarities to the former mine, 2% copper. What's great about this project, there's the Horn smelter, which is only an hour and a half away. So I don't need to find a big deposit, even though I do believe there's going to be a big deposit in our the VMS. We have not explored that area at all. So an hour and a half away, you can actually just deliver the copper-rich VMS.
And I think in this particular market with the critical mineral being copper, that you really can't ignore that. You've got to put that smelter to work, right?
Oh, absolutely. We can't ignore it. We've had some significant results there from the past. But like I said, again, after 400,000 meters of drilling, I really wanted to bring out a resource with a really robust economic study. We have a team that's going to be dedicated to exploration, and definitely exploration that's going to include finding other VMS zones to make it much richer.
Let's do a little bit of a deeper dive. Tell us about the metallurgy.
The metallurgy is really amazing. Total recovery is 99+%. It's really free gold. When you adjust with gravity, the lowest number that we got was 75%. And once you float it, you're at 99+%. That was for the high grade zone. Look forward to the results that are going to be coming also on the metallurgy for all the other zones. So all the other zones that are going to be included into the resource and the economic study, we're going to get the results of the metallurgy, and we'll see what they come in at, but they shouldn't be much different. The only thing is that when you're already at 99 plus, you've set yourself a really high bar. So we're hoping we can come at that number or around that number.
Audience, if you're looking for a gold story, this is the gold story. Amex Exploration trading on the TSX Venture under the symbol AMX, and in the U.S. on the QX, OTCQX, AMXEF. Victor Cantori, my friend, thank you so much for joining me today on the program at Mines and Money Miami.
Thanks a lot for having me.
I've been chatting with Victor Cantori, the president and CEO of Amex Exploration, trading as AMX on the TSX Venture Exchange and AMXEF in the U.S. on the OTC. Head to the company's website, AmexExploration.com. From Miami's Mines and Money Conference, I'm Ellis Martin, and this is South Florida's Money Talk Radio. Wow, that was a lot of information. Want to hear it again? Tune in tomorrow and get on our email digital audio distribution list. Sign up easily by going to ellismartin.com. That's ellismartin.com. We'll send you every interview as soon as it's ready. ellismartin.com. Do you want to speak with me personally? I'll take your call, 561-388-5084. That's 561-388-5084. Until soon, I'm Ellis Martin, and this has been Money Talk Radio, South Florida.